Thanks everyone for joining. I have given this talk 50 to 100 times at least. I love this talk. I pick up little nuggets from each time I do it from people, who are attending, people out in the field, using our product and raising money and talking to investors. So this talk kind of evolves over time. Just very briefly, my name is Nathan. I run Foundersuite. I've had interactions with lots and lots of you. So good to get to know you guys. Very quick background on my story. I have run Foundersuite for about 5 years now. I've got a couple thousand startups on the platform, raised lots of money. Before that, I spent about 10 years as fractional CFO working with startups, helping them raise capital. And before that, I was doing investment banking, helping companies raise capital. So my bad joke is I'm kind of a one-trick pony. I know how to do one thing, raise capital. And if Foundersuite doesn't work out, I don't know what the heck I'm going to do because it's all I know how to do. But I always like to start off this talk with how not to do it. And Hunter Walk is a VC here in San Francisco, and I just love this tweet. Will you intro me to investors is too broad to be acted upon, but this is how a lot of founders approach fundraising. They just start asking everyone they know if they can introduce them to some investors. And it's a logical approach, right? But it's flawed in for a couple of reasons. One is it's too broad, too ambiguous to be acted upon. The other reason it's flawed is because it's putting the hard work of figuring out who you should be targeting on the other person, where really the other person should just be a connector, not the person to help you figure out who to go after. So instead of doing it in this sort of unfocused way, we really like to think of fundraising as a sales process, right? If you've ever been in sales, especially B2B sales, it follows a pretty straightforward approach. You're building a list of leads or targets. You're qualifying those leads. You're engaging with them, and ultimately you're driving them all towards a yes or no, towards a close. If we expand on this, we think of our fundraising funnel or pipeline, right? Top of the funnel, we're building this large list of potential investors. Then we're screening, filtering, qualifying that list. And then the third one down here, if you're going after venture funds, you don't just go after benchmark capital, you got to find the right person at that fund, the right partner, someone who's a decision maker. And then where it's a little bit different from B2B sales is number 4 here. So much of fundraising runs on the warm introduction. We're going to talk about that. Those introductions, of course, lead to pitch meetings. You're crushing your pitch meetings. You get into due diligence and term sheet discussions. You get through due diligence. If you haven't been through due diligence, it's basically a deep dive of your business. An investor will offer you a term sheet, then they send their due diligence list. When we were raising money for Foundersuite, I got my term sheet on a Friday from FFVC out of New York. On Monday, they sent me the due diligence list, and it was 150 items they needed from me, everything from articles of incorporation to personal references to access to my Google Analytics and financials. Anyway, you get through due diligence, ultimately you're selling shares of your company. So fundraising is just another sales process, and we can break it into its step-by-step components. I find it takes away a lot of that anxiety and stress that founders have about this process. It can be learned and mastered by anyone pretty quickly. So step 1 is building that top of the funnel, especially if you're at the pre-seed, seed, angel, early stage rounds. Fundraising is really a numbers game. When I raised money for Foundersuite, I raised about $1 million in our seed round. I pitched over 200 investors. I ended up with 1 seed VC and 10 angels. And you can do that math. That's about a 5% conversion rate between who I pitched and who ultimately wrote me a check. That also means I got rejected 95% of the time. And that's pretty typical. I've seen that 5% conversion rate play out, over hundreds of startups. This can sometimes be a shock to founders, entrepreneurs who've been successful in other areas of their life, that now they're getting rejected 95% of the time. Just know that that's actually pretty normal. And that also emphasizes why you need a really healthy top of the funnel, why you need a large top of the funnel. A couple places to build that funnel. Angellist, of course, has been around for quite a while. They're even older than Foundersuite. I haven't looked at lately, but I want to say there's about 35, 40,000 investors in Angellist. And it skews angel, but there's a lot of VCs on there as well as syndicates. And you can search by market, geography. I also like the way you can search by school or company. So if you went to a certain university, go search and see what angels, went to that. That's a great icebreaker. Also, if you worked at a large company, that spun out a lot of angels, that's also a great way to kind of break the ice with angels. Most of you, I think almost everyone on this call is a Foundersuite user, so I won't go into too much detail here, but obviously, we have a database as well, and you can search it by name or keyword in the first bucket, type of investor, that's angel, VC, family office, second bucket, industry in the third bucket, and like marketplace, SaaS, fintech, and then location in the fourth bucket. The couple little quirks on here, some of the types don't also have an industry, like family offices are kind of secretive, so we don't have a lot of good industry tags that also go on family offices. So sometimes it makes sense to actually just do a search only on your industry or only on type. Another little quirk is the location. A lot of it's done by city. So if, instead of searching UK, search by London. I know there's several thousand investors in London. One thing I'll tease you about, and actually before I get there, the general concept here is you search on marketplaces, you scroll through the list of investors that look good. If anyone catches your eye, open up their LinkedIn page, their web page. These social links at the top will open up additional, pages around these investors. Do another 15, 20 minutes of research on that investor. If they look good, click the add to research, drop them onto your CRM. That's typically how it goes. So you're doing an extra little bit of research, kind of off the site, but hopefully this is helpful. The thing I'll tease you about, something we're working on as we speak, is what we call user-generated investor insights. We've got a couple thousand startups out there in the field meeting with investors right now as we speak. We're going to be trying to glean some of the data that you guys are, when you're out pitching an investor and they say, oh, we just raised a new fund, that's really valuable information. So we're going to try and, incentivize you to add a little bit of that data and insights to the database. And then, of course, get that data in return. Or if an investor says, we're not raising we're not doing new deals this year, that's also really useful for the founders who come after you. So we'll be adding some of this investor insights soon. We're also doing a very big database update, adding about 15,000 more investors. So hopefully you find some value there. Crunchbase is another good place to be building this target list. The way I like to use Crunchbase, you can do just general searches on here, but I like to make a list of like 10 or 12 companies that are similar to mine, but not directly competitive, similar but not directly competitive. And I plug each one into Crunchbase one by one, and I see who funded them at the relevant stage I'm at. So if I'm raising a seed round, I'd pick out Elephant, Draper, Fisher, Jurvetson, and, Andy Palmer maybe, and add them to my target list, right? The other way to use Crunchbase is if you have an investor or you land an investor, you can plug them in and it will show you who they co-invest with a lot. So that's a great way to use that as well. Lots of places to be building. We're still in step one here, building that target list of investors. This first bullet here, these are newsletters you can subscribe to. I read Strictly VC kind of every night. She sends it out at like 11 o'clock at night. I kind of skim it, or the next morning with my coffee. And basically when a startup raises capital, they announce it in here so you can see who's getting funded and who's funding them. Also, when a new venture fund is formed, or when a venture fund raises a new fund, they typically announce it in these newsletters. And the best venture fund to be pitching is one that just raised a new fund. If you're familiar with how this industry works, a venture fund raises a $50 million fund, and then over the first year or two, they invest half of that, say 25 million, into a bunch of new companies, and then they save half of it to double down and bet on the winners from that first batch. So the best venture fund to be pitching is one that just raised a new fund. And these are free, by the way, so sign up for some of those, start paying attention. Conferences are kind of interesting. Obviously, there aren't a lot of, real conferences happening right now. But go back and find the conferences in your industry for the last 2 or 3 years. Investors love to build their own brand by getting out there and speaking at conferences. So just go look at the agenda. If you're in blockchain or cannabis or whatever it is, go see who is speaking at conferences in previous years. Quora, TechCrunch, Medium, Twitter. Quora is kind of interesting. People have spent a lot of time building lists on Quora, like who are the top 10 e-commerce angels in Los Angeles. There's probably a list for that on Quora somewhere. And then Twitter is really interesting. VC activity on Twitter is like really blown up in the last 2 years or so. There's a lot of really interesting insights you can glean there from Twitter. So just start following your favorite VCs. PitchBook and CB Insights are paid databases. I've used PitchBook. The data is pretty deep. You can get who invested in a deal, who was the lead investor, who was the follower, who the attorney on the deal, stuff like that. These are very expensive. PitchBook, I want to say, is about $20,000 a year, $15,000 to $20,000 on up. And then CB Insights is even more. And then mining your personal network. So I'm going to show you 2 ways to tap your own personal network to help build your target list. Sorry. Okay. So first is LinkedIn. This is my LinkedIn homepage. I am on a paid plan, but you don't need a paid plan to do this. So I'll just go up here and do a general search on something like angel investor. Okay, let's see here. So interesting. Usually this is going to tell me how many results LinkedIn changes like week by week. Usually this will say up top, there's like 100,000 people, right, in the results, which obviously is too much. So what I want to do next is apply a filter. And I might do a first degree connection just to kind of remind myself of who I'm connected to directly. But in this prospecting scenario, I'm going to do second degree. And let's do San Francisco and show results. Okay, here we go. So that broke it down. Usually that first search on angel investor shows like 100,000 results. Now when I apply a couple filters, it's 4,300 results. Still kind of a lot. Maybe I'd apply another filter or 2. But what I want to do next is I basically scroll down this list, and anyone who looks even remotely interesting, I will command click or right click and open them up in a new tab. And I might even open up 50 or 100 of these all at once. Okay. And notice, I don't know if you can see it, but I'm opening up these tabs. Then what I want to do is I spend, 20 to 30 seconds skimming their profile. And a lot of times it'll be in the about section. I'm kind of looking for any clues that this guy might invest in my type of thing. So he invests in fintech. Foundersuite's kind of on the periphery of fintech. And he co-founded the Pitch. So he'd probably really get what we're doing at Foundersuite. So I would add this guy to my pipeline. And so I'd add him to my pipeline, add him to my CRM. And then what else I want to do here is click on this mutual connections tab. And I want to find my best mutual connection to this gentleman. I might, maybe it's Charles, I know the best. You're kind of optimizing for like, who do you know the best that can make the intro? And also, who would be a good fit. Charles is an investor, so that's kind of nice to have another investor referring me in. But basically, I've forgotten his name already. I'm adding Sheil Monat to my CRM, and I'm adding my best connector, my best mutual connection. And then I just do, Command W, close that tab, move on to the next one. Christine Hahn. Okay, what does she do? A lot of times they'll either have it in the about section, like what they're looking for, or you can see in their experience, a lot of times people will list out their investments, what they've invested in. Nothing really jumps out here. I might click through to this Better Planet Investments and look at that portfolio, but for sake of interest, let's move on from that. Next, SEMA. Let's see. What does he do? What does he do? You know, focus on emerging technologies within heavily regulated spaces. So probably not really what we're doing here, although I might go in and look at some of his portfolio companies as well and just see if anything looks like what we're doing. Like, you know, Foundersuite's kind of fintech and SaaS and SMB. So I'm kind of looking for those little keywords in their about section. And then last but not least, let's look at Jeff Siebert really quick. Okay, advisor. All right, nothing really jumps out. He doesn't list his investments. He doesn't really say what he's investing in. So I'm just going to move on from him. And I just repeat this process. You can actually get through, you know, 4,000 is kind of a lot, but you can get through 1,000 of these pretty quickly in a couple hours, pulling out people from your network. Okay, so that's how to use LinkedIn. I'm going to show you one other technique I used when I was raising money using Foundersuite. So this is a demo pipeline, but what I want to point out here is a column right here called Steve B Leads. If you can't read it, it's called Steve B Leads. What I did, come over here, I added a new column. I called it Steve B Leads. Then over in my settings, I invited Steve Bennett. He's a real human. He's a professor of finance at San Jose State University. He knows lots and lots of people, and he's one of my advisors. And so I invited him in and I said, hey, Steve, I'm getting ready to go raise money. I'm building out my investor target list. I've made you a column. Can you come in here and populate your column with some people that you are willing to introduce me to? And he did. He came in and added 10 or 15 names to his column. I also asked him, just while you're here, I've also got my research list. If you know anyone in this research list, you know, if you know Brady Forrest, just open up his card and add your name to the connector field. So I'm asking him to populate his column and kind of skim my research list. And he did that. He added 10 or 15 names. I repeated this process with a couple other advisors, and I generated about 50 or 60 good, solid, warm intros by having a structured way of asking my advisors to open up their network. Much more effective than if I just called Steve and said, hey, Steve, do you know any investors? Okay, last but not least, as Yoda says here, when you start to really get into this and look at all these sources, your radar will kind of start to tune in and you'll start to find investors all over the place. All right, so now that let's move on to step 2 finally. Now that we've actually built that list of, call it 200 or even 300 investors, we want to start removing people from that list. Back to our B2B sales metaphor. The best salespeople don't just chase every prospect or target. They spend their time qualifying those targets, prioritizing them, ranking them, so that they're really using their time effectively when they're actually going out to fundraise or to sell. We want to do that with fundraising as well. Anyone who's invested in a competitor, just remove them off your list. If they're ethical, they won't want to talk to you. If they're unethical, they'll send your pitch deck to your competitor. Venture funds, number 2 here. If a venture fund has not raised a new fund in the last 2 or 3 years, they're probably only doing follow-on deals to their existing portfolio companies. That doesn't mean you totally should take them off your list. Maybe you use them as a practice pitch, right? Maybe you actually put them first in your outreach to get a practice pitch. But, you know, they'll still take meetings, but it's easy to waste time pitching venture funds that aren't doing a lot of new deals. So just be mindful of that. I wasted a lot of time doing that. Same with angel investors. If an angel investor, you look at their portfolio on Angellist or LinkedIn or wherever, and all their deals are from 5 years ago, you know, they're probably taking a break. Wrong sector, wrong stage, wrong geographic location. You know, if you're fintech startup, you would not be pitching a healthcare investor and vice versa. You know, that should be pretty obvious. Stage sometimes is tricky. If you see a company, a venture fund that's called growth capital, that actually means later stage. You'll start to kind of tune into those definitions and little nuances. And then geographic location. This is actually pretty interesting. when I was helping companies raise capital, even 10 years ago, the joke was like investors would invest in a bicycle ride distance from their office, and then it was a Tesla charge distance from their office. Then even before COVID hit, investors were starting to become a lot less concerned about where startups are located. And that was a trend that was already in motion. And then of course, COVID hit. And it feels like, at least at the moment, where you are matters almost not at all. Very, very little these days. I won't say not at all, because it does still matter, but it's really changed the game, and it's really opened up in a positive way for a lot of startups that are not in Silicon Valley or not in New York. So that's kind of cool, since everything's on Zoom now. And then bad reputation. This is something, like I mentioned, our investor insights we're going to be adding to our database. We want that input, right? If an investor was half hour late and just super rude to you, or did something else inappropriate, we want to capture that in our database. If you're in an accelerator or other incubator or other founder network, that's great to lean on when you're talking to investors. The point is, you're going to be married to this investor for the next 5 to 8 years of your life. So you really want to be married to people that are good for you. I have worked with founders in the past that sunk $200,000, their entire life savings, into building their startup. They raise money, they raise another round. In that second or third round, they lose control of their board, and ultimately maybe the growth didn't quite happen as they expected, and the founder got fired. So just imagine what that feels like. You want to be working with investors that really are good. So as you get down to the term sheet negotiation and due diligence, you should also be back channeling and checking on these investors, talking to founders they invested in. Bottom line here, from our initial list of about 200 or 300, we want to be crossing off roughly 25 to 30% of that list, so that what remains is a really highly focused target list of investors, a really well qualified list. So much about fundraising is about getting momentum going for your deal. And it's very hard to get momentum going if you're chasing a poorly qualified target list. So don't skip this step. It'll make your life easier. The more research and qualifying you do of your target list, the faster and more efficient your fundraising will go. Okay, so now that we've built our list, we've qualified that list, now we want to find out our best connection path or best intro path to each investor. This is a lot of LinkedIn work here. If you, in Foundersuite, we've collected a lot of their LinkedIn links. So just by clicking that, it'll open up Tim Draper's LinkedIn page. And then you just look and see if you have any mutual connections to Tim and who your best connection is, right? Repeat that process 50, 100 times. If you don't have any mutual connections to Tim, what do you do? Probably the number one question I get. The little hack here is to look at Tim's portfolio, find 2 or 3 founders that Tim invested in the last 6 to 12 months, and you cold email those investors. Simply, hey, I see Tim put some money into you. I've been following Tim for a long time. I'd love to hear what it's like working with Tim. Is he active? Is he passive? Has he been helpful? You get, can we hop on a 15-minute Zoom call and just chat for a little bit? I'd love to hear your insights about Tim. You get a dialogue going with that portfolio company founder, then it's okay to be asking for the introduction to Tim, assuming they kind of like you, right? And the reason this hack works really well is because Tim got to know that founder over a period of several months usually. They went through due diligence on that founder. There's a level of trust that Tim has established with that founder. And on the flip side, that founder was doing exactly what you're doing 6 months ago, 12 months ago. And there's a pretty good empathy level there, right? Founders are pretty good about helping other founders who are in the same bucket they were in. So it's a great way to, network your way into that warm intro, even if you don't have any connections. If you're not willing to do that, there's always the cold email. It's easy to find people's email addresses. We have a lot of it in our database, hunter.io, I think. You can also look up emails, right? Easy to find emails. The problem with the cold email is Tim Draper's already getting 50 to 100 warm intros a day. So your cold email already has a little bit of a black mark on it that you were not willing to network your way in. And some investors will even use how you reach them as an initial screen. As just one final data point, I was on a webinar with Jeff Clavier, who runs Uncork Capital, and they're really popular seed stage fund here in the Bay Area. He said they had invested in like 700 startups in the last, call it, decade. 2 of those came from cold email. So 2 out of 700. So it's not impossible to do it by cold email. It's going to really reduce your odds of actually getting funded, but not impossible. Okay, I don't need to sell you guys in this. I used to build these elaborate spreadsheets when I was consulting, and of course, that's directly what led us to launching Foundersuite. I'll just show a couple little, since pretty much everyone on this call is a user, I'll show you a couple little kind of hacks or tips, I guess. One thing I do is I will customize the columns. I actually added a couple custom columns to my pipeline. I added viewed deck. I added responded, because when I'm sending out, my deck, I want to see like who viewed it and which ones I need to maybe send a follow-up email on. As you probably already know, your job basically as the CEO is to be moving all these cards through the stages of your pipeline, right? We call it kind of like a chess game. If you move them all into your committed column, you win the game. If you move them into the no column, you lose the game. So I actually recommend people block off pretty good chunks of your time. Maybe it's 4 hours every day. Maybe it's 2 days. I was talking to some founder yesterday, and she blocks off Tuesday and Thursday, the whole day, only to work on fundraise, right? You got to do it. And you just block off and like, I'm going to come in and work on my pitched column. Everyone that I've pitched, what can I do to nudge them along into talking about terms and diligence, right? For everyone I've contacted, what can I do to nudge them? What can I do to nudge Darwin Ventures into setting up a pitch meeting, right? That's your goal, is to really be working your pipeline. Couple things that are also kind of useful here. I think you probably already know most of this, but obviously adding your potential committed amount here, kind of nice. Here's where you're adding notes. Here's where you're adding activities. If you've got a task like, send due diligence package, push it out to your calendar. Attaching files, like what's the term sheet or pitch deck that you sent to these guys. And then, maybe my favorite is connecting your email so that all your email threads get pulled in automatically. And that looks a little funky there, but you get the point. If you're running a deal with your advisors, right? I showed you my example using Steve Bennett. If you've got a couple advisors or other people working with you in the account, you can each connect your email, and there's a little toggle over in settings called high visibility fundraising, but you can turn that on and it will show everyone's email conversation. So if you want to see what your advisor, the email conversations going back between her and the investor, you can see that, which, I have to warn you, can be sometimes a little scary because it's like you're seeing other people's email threads. Sometimes the investors are very direct, like Nathan is a total, arse, I'm not going to invest in him or whatever it may be, right? You might see threads like that, but it's pretty powerful to really get that insights all in one spot. So that's a CRM. Customize the columns to match your workflow. And that's good. And then, I mentioned the momentum thing. These little gray bars will show you how long it's been since you've had a last activity or action with that investor. And your job is to get momentum going. Your job is to be keeping all these bars full, right? That means nothing's slowing down, nothing's slipping through the cracks. Last but not least, I recommend founders, kind of check out the activity timeline. If you're working maybe with a co-founder in this account, you can see what each other's doing, how many new investor leads how many new committed investors you added last week, last month, and then just to see your overall to-do list. That's what that's for. All right. Reach out always if you have any questions. But really, as I mentioned, fundraising is about getting momentum going for your deal. There's a direct correlation between tempo and speed and your probability of actually getting funded. If your deal is moving slowly, it's never going to get momentum going. It's never going to catch fire, right? It's going to get stale, and investors can really tell if a deal is stale, right? And conversely, investors can tell when a deal has momentum. So you want to be running a fast, efficient fundraise, right? And that's why you need a CRM to begin with, right? To stay on top of all these activities. Every time you talk to an investor, it leads usually to 2 or 3 follow-up activities, right? And so if you're talking to 200 investors, now we're talking 600, several hundred, 1,000 tasks and to-dos. So you need some way of keeping track of all this. All right, there's my pitch on Foundersuite. Thanks for listening. Before you actually go out there, if we recap our steps, we built our target list, we qualified it, we mapped our connection paths, we've got it all loaded up in Foundersuite CRM. Before we actually get out there, make sure your pitch deck is absolutely amazing. The number one reason I see founders fail, literally, is their pitch is crap. And you don't get a do-over. You don't get to go back 2 months after pitching an investor and say, oh, we've improved our deck. Can I pitch you again? Doesn't happen like that. You get one shot, right? So you need to go out with an amazing pitch deck. So make sure you've given your pitch to 5 to 10 people who will give you honest, hard feedback about your deck. If you are a gold subscriber of Foundersuite, we do a free 30-minute pitch deck tune-up or review. So get in touch for that. It's always fun to do. And I've reviewed thousands of decks, so usually have some decent insights. But just make sure your pitch is absolutely crushing it before going out and talking to real investors. Even so, you might stack a couple of your, third tier investors as your first couple meetings, right? Just to get your pitch kind of practiced. Don't put your very dream investor as your number one pitch. Your pitch will get better after you've given it 10 times to real investors. Also, it's great if you have a financial model. If you're raising $1 million, show me how you're going to spend that money. Show me where it takes the company, and ideally what the business model looks like. And then I also like to do an executive summary, just a one-page kind of summary sheet about your business. All right, we're just about to really kind of rock and roll here on our fundraise. As you're doing, I think it was step 3, where you're mapping your connection paths to investors, you might find that you have a couple power connectors. These are people who are, really well networked. Jeff Thomas is a real human. He works at NASDAQ. And when I was doing my research on my investors, I noticed that Jeff was connected to a lot of my targets. And so I simply put together this quick little email to Jeff. Hey, Jeff, I'm raising money. I see you're connected to all these investors that are on my target list. Do you know them well enough to make an intro? And he can just respond, I know Tom, I know Sean, I know Mamoon, I know Jessica. I don't know the others. He can just kind of respond, yes, no, making it easy, right? For everyone he does say, yes, I'm happy to make an intro, I create a new clean email thread. And this is a really important slide. So if you've been tuning out and checking Facebook, come back for a minute. This is my new clean email thread, asking for that introduction. Clint is the target investor. So let's look at the subject line. First of all, notice how short this email is. Another mistake I see founders make is in this intro email, they'll have 5 paragraphs describing the entire company history and a 40 megabyte pitch deck attached. No one will read that. You're shooting yourself in the foot if you send that out because no one will even read it, right? So that's not the approach. Notice how short this is. So subject line, Jeff, can you introduce me to target investor name? And then what are we doing? Raising a seed round. We had a lead investor at this point, and we had 2/3 of the round committed. So I put that in the subject line. Of course, we did not start off with that. So whatever is the single most exciting, sexy data point about your business, put it in the subject line. Again, these investors are getting 50 of these a day. So you want to make sure they actually look at your email. Then the body. Jeff, good chatting with you. As mentioned, I'm raising a seed round. Here's what we do. We make this investor management platform. Here's a link to our website. Another common thing I see people forgetting to include their website in there. And then the ask. Could you introduce me to target investor name? And then, why? Because he's got a good track record in our space. And then I noticed this guy went to the same very small college in Iowa my dad went to. So I put that in here to personalize it. And then here's a link to our deck. And this is obviously hosted on Foundersuite. We have a pitch deck hosting tool. So I'm also showing off our own platform. But this also serves two purposes. One is I want Clint's the investor, remember. I want Clint to click that link and look at our deck. And if he says, sorry, Jeff, this isn't a good fit for me, no problem. I won't waste my time setting up a pitch meeting with this guy, right? So it's a way of pre-qualifying the investor, right? The other thing is, if he says to Jeff, sure, I'll take a meeting with Nathan, and I notice, that he did not look at my deck, then I know when we get on a pitch meeting that I need to go in cold, right? Or conversely, if I see he did spend 10, 15 minutes on my deck, I assume he's a little bit more familiar. So I use it both pre-qualify that investor and to gauge whether to go in totally cold or a little bit, more warm on my pitch. So this is not our full pitch deck. This is a teaser deck. 5 slides: problem, solution, market, traction, and team, right? Say it again: problem, solution, market, traction, and team. And that's it. And that's enough for Clint, this target investor, to get an initial feel for what we're all about, stage we're at, what we're doing, who we are, and he can make a decision whether or not to, proceed to a meeting or not. And that's it. And I can track and see, did he look at it, how much time he spent, all that good stuff. And then Jeff, again, just my connector, all Jeff has to do is, click forward. Hey, Clint, Nathan's a buddy of mine. Do you want to take this intro? Boom. Hey, Jessica, Nathan's a buddy of mine. He's raising money. Do you want to take this intro? Boom. I'm making it easy for my connector to do his or her job. Super key. If you're asking your connector to write this sort of email for you, some of them probably will, but you're going to get a lot less action going. So make it easier for your connector to do their job. Okay, so step number 6, hustle like you've never hustled before. If you haven't watched HBO's Silicon Valley season 1, go and borrow a buddy's HBO password and log in and watch season 1. It's so funny and so true. And it's just brilliant. It's like perfect. So go watch it. It follows Richard, CEO of a fictional startup called Pied Piper. And Richard's an engineer. He's an introvert. He just wants to be writing compression algorithms for his startup, but he's got to get out there and meet all these investors. And these investors are all really smart. 40% of all VCs went to either Harvard or Stanford. Many of them have huge egos. And they've been successful. That's how they're investors. And then investing is what they do every day in, day out. Whereas for Richard, it's his first time doing this. So there's an automatic kind of power imbalance there, right? The only way to kind of overcome that is to treat fundraising a little bit like a game. And as I like to say, channel your inner hustler, whether it comes natural to you or not. And go watch HBO's season 1. So some hustle tips here. Doing the intros in parallel. This means asking for your connectors for those introductions all around the same time frame. We call this the Blitzkrieg approach. And again, as I've mentioned, your core job as CEO is to get momentum going for your deal. Investors literally can sense if a deal has momentum. They can sense if a deal does not have momentum, or worse, is getting stale. So your job is to get momentum going. Every time you have a meeting with an investor, even a Zoom, you'll probably get asked, so how's the round coming together? That's their way of probing. Does this thing have momentum or does it not? And you want to be able to answer that with something like, we just started our fundraise. I've got 12 meetings this week. I've got 14 set up next week. We're running a pretty efficient process using Foundersuite, of course, and I'm hoping to close this out by, middle of March. You're signaling right there. Other people are interested. You're a professional. You're running an actual process, right? The fact that you're using Foundersuite, the fact that you're even on this call means you're, have a focused approach. You have a timeline, and those three things all together, interest, process, and timeline, is a clear signal. Like, if I'm even remotely interested as an investor, I need to kind of pay attention and march to the founder's timeline. Otherwise, investors will watch and wait. It's investors' like natural inclinations to watch and wait. So you've got to have these triggers. Okay. Your pitch should be getting better and better, right? Continually refine it, test out different slides. If you've got a marketing, if you've got a go-to-market slide that's sort of raising eyebrows when you present it, try out a different version of that in the next pitch. And your pitch deck should be getting better and better. By the time I finally raised our seed round, I was on version number 42 of our deck. I would go pitch a couple investors, come home, put my kids to bed, crack open a beer, watch Silicon Valley, and work on my pitch deck. And your pitch, if you do this, your pitch just gets better and better over time. And ideally, you're getting momentum going on your round. Your pitch and story is getting better and better. These two things kind of reinforce each other. If you've got a co-founder, have her sit in on the pitch meetings and just write down every question the investor asks. Go back, make an appendix slide for that. Just kind of improve your pitch. Leveraging VCs off each other, that kind of goes back to the first one. You want to be signaling that others are interested. Never lie, never exaggerate. Assume investors are going to be talking to each other. And then maybe one of the most powerful hacks or tips you can do is to send a regular company update to everyone you're talking to. Everyone in your pipeline should be getting a monthly company update from you. And even better, if you can start this process even, months before fundraising. While you're in the middle of fundraising, they should be getting it. But if you can start this even, 4-6 months in advance, that's even better. And let me just show you an example of that real quick. So I call it, kind of the update to the prospective investors. Let's take a look at an example of one of them. This is Foundersuite here. So it's going to be something very simple. Of course, this would be your logo, your photo. But now look how short this is. It's one page basically. And the key funding hack here is to, you've built a list of 200 investors, reach out to them in a cold email saying, hey, my name is Nathan. I run Foundersuite. I'm not raising money right now. I'm going to be raising money, in June, whatever, pick a day, it doesn't matter. I'm going to be raising money in Q3. I've identified you as like right in our sweet spot. I've followed you on Twitter for a while. We send out a monthly company update. May I have your permission to add you to our distribution list? So you get an early look at what we're doing. So you get a sneak peek at what we're doing. You're playing to their kind of FOMO in this way. And then and a lot of investors, because that's their whole job, is to get early access to deals, right? That's how you become a successful investor, is getting early access to deals. They'll say, sure, add me to your distribution list. Then you start sending them something like this every month. Couple key points here. Notice how short it is. I mentioned that already. In the opening here, just a little reminder about what you guys actually do, right? A little summary of what your business is. Shouldn't be long. And frankly, this can even stay the same. You don't even have to necessarily edit this. This can stay the same in every update. Maybe you update, this little part here, if there's a little data point in there. Otherwise, this stays the same. Then the next one is key wins. What did you achieve last month? Or, whatever the time period is. What did you achieve? What are the key things? What is the progress that you achieved? And then some metrics. And then a little bit about, what you're going to be working on next month. And then include, a team shot. Include a photo of the team. And ideally, I don't have it here, but maybe a photo of the product too. If you have your product and a team shot in every update, that's great. But what we're doing here, why this works so beautifully, is here we're telling the investors what we're going to do next month. And then in the next month's update, we tell them what we did. So you're creating this virtuous cycle of, I'm going to tell you what I'm going to do. I'm going to go execute. Then I'm come back and report back on it. And oh, by the way, my metrics just increased from last month. They'll check on this, right? It's a beautiful cycle. You're showing you can execute. You're showing you can communicate. And then if you say you're going to start raising money in June, for example, in the April, May, in the May update, maybe you have a little bold thing up front saying, alert, maybe not alert. Let's say something else. Update, we're going to kick off our seed round next month. Please let me know if you would like early access to our pitch materials. You're signaling that you're going to start fundraising and that you want to give them early access to this. So you've warmed up these investors over, 5 months, and then you're kind of and I've seen people literally get their rounds filled almost instantly because they've warmed up these investors. They've nurtured these relationships over a period of months. So, even if so ideally you can start this in advance, but even if not, make sure you're sending an update to people you're already talking to. Whew, okay, we're almost at the end here. I know this is a long talk. So try and treat this as a full-time job. I know people who will give some of their duties to their co-founders. I know people who have even hired like a part-time COO so they can really just go all in on fundraising and know it's just going to be really stressful. I thought I was getting an ulcer about halfway through due diligence. I had my dad write me a prescription for ulcer medicine. Walgreens wanted $200 for it, so I ended up not getting the medicine, and I did not get an ulcer. But it's really stressful. Just know that's common. Couple more quick little hacks here. We did some retargeting ads on Facebook, and I've heard people do it on LinkedIn as well. Now, this is not an ad talking about our fundraising deal, which can be illegal in the US, but it's just an ad for Foundersuite, but I'm targeting those investors. I had one of my angels say that every time he logged into Facebook, he saw Foundersuite, and he wrote me a $70,000 check. So maybe it had a little subliminal messaging to him. We have a nice pitch deck hosting tool so you can see who's viewing the deck. Other tools are out there like DocSend, of course, can do that as well. Number 3 here, sometimes people will use Facebook to find those mutual connections instead of LinkedIn. The last bullet here, Angellist syndicates, if you have half or 2/3 of your round already filled, go and find a syndicate to fill out the rest. Not a good way to initiate your round, but a good way to fill out your round. Angel groups, there are hundreds of angel groups all over the world. The advantage is, you can get in front of 60 angels and pitch 60 angels at once. Disadvantage is it usually takes a couple of months to go through their screening process. And then equity crowdfunding. There's lots of sites up there, WeFunder, Republic, Start Engine. There's a bunch of these. Almost universally, you have to bring your own investors, right? There's a myth that you just go put up a nice splashy landing page and investors flock to you. Almost to a T, or basically to a T, you have to bring your own audience to equity crowdfunding. So just know that that's how it works. And you can do a parallel, traditional fundraise and equity crowdfunding at the same time. If you're raising like an angel round or seed round and you don't have a lead investor, you don't have a VC firm taking over half the round and leading the round, what do? You're doing a party round. What you do is you go around to all these angels and individuals you're talking to, asking them, so, how much would you invest and on what conditions? You're collecting all these conditional commitments until you become oversubscribed. So if you're raising a $1 million round, collect all these conditional commitments until you have, 1.3 million in conditional commitments. Then you go back to everyone else and say, hey, this actually went faster. We're actually oversubscribed. Here are the terms. Do you want in and out, or do you want in or out? And of course, you're going to lose some people, but you can actually turn those conditional commitments into just a regular commitment by doing it like this. Almost done here. You've been fundraising for a couple months. Probably really, really sick of it. I know some of you literally live in Foundersuite from dawn until dusk, which I love, but you're probably sick of Foundersuite. Every time, so now let's try and actually bring this in and close your round, right? Every time you pitch or meet with an investor, actually ask them what their interest level is. So an example is, hey, great meeting with you. Thanks for taking the time. I'd love to hear, what your interest level is in Foundersuite, what your typical check size is, and what are next steps. And then just stop talking. And you'll get a lot of responses like, oh, we'll talk about it at our Monday partners meeting. But if that response also includes a next step, that's a really good buying signal. Number two here, make them actually chase you a little bit. So again, a scenario is like, thanks so much for taking the Zoom meeting today. It was great telling you about Foundersuite. I would love to hear how you help your portfolio companies grow. And I'd love to hear, specifically how you would help me grow Foundersuite. And then again, stop talking. Every investor that's been doing it for more than a month has lost out on a competitive deal where there are more investors trying to get into a deal than there were seats at the cap table. So you're signaling that they might have to actually work to get into your deal. And as your momentum increases, this becomes really tangible. And I've seen investors get like piranhas going after a deal once it gets momentum. And so you're kind of making them pitch you a little bit why you should let them into your deal. It totally flips the leverage on this whole thing and who has the power in this. So try that out. It takes multiple pitch meetings before you get a term sheet. As a general rule of thumb, 80% of your time is spent getting your first term sheet. 20% is filling out the rest of the round, right? It can be actually very hard to get a no, right? This is kind of amusing. I actually have on my Foundersuite board, go to it really quick. I have my no column, right? And then I added another column called no response. This is for people who ghost me. And then I have a revisit for Series A column. These are two custom columns. Revisit for Series A means they said, I like you, but you're too early. That's still a no, but it's a no, not right now. So it can actually be very hard to get a response. You're going to get a lot of VCs ghosting you. Just know that's normal. Don't take it personally. I follow up, like two to four times, and then I kind of move them into my no response column and move on. And then when someone does say, I like it, put me down for 50K. This is called Paul Graham of Y Combinator's handshake deal protocol. After that pitch meeting or Zoom call, go back and just type it up like, hey, great meeting with you. Just confirm you're in for 50K. Do you mind just, writing back, confirming that? If they do write back and confirm that, you can pretty safely move them into your committed column. If they don't confirm in writing, even just an email, they're still just a prospect and kind of should be treated as such. And then if you're going to go down this path, everyone on this call, I'm assuming, is already fairly far down this path. If you're going to go down the path of raising money, don't let up until the money's actually in your bank. How do you know, corny dad joke, how do you know when an investor says yes? When his check clears, right? Everything before that is just a maybe, right? And I see deals fall apart at the last minute. I see founders, one of the most sad things I see is founders get into fundraising. They're going hard at it for a couple of months. They start to get a little burnt out on it. And they start to kind of just pull away. Maybe their customers are pulling them back into the business. And they sort of take their foot off the gas pedal. And then one investor drops out, another drops out, and the whole deal collapses. It's terrible to see. So if you're going to raise money, keep your foot on the gas pedal, get it over the finish line. Here's your money shot. Put this all in perspective. We're just about to open up for Q&A here. I know this went a little longer than expected. Put this all in perspective. You raised $1 million. That gets you 12 months of runway. That really means you need to start fundraising 6 months from now. You need to start building the target list for your next round. You need to start doing the investor update approach. Start, reaching out to them, sending them a company update, nurturing those leads for your next round. And your next round is going to have a higher level of expectations of what your business and metrics are all about. So, don't delay that process. You guys already know Foundersuite. I won't plug that very much. We've got a really good podcast and YouTube channel called How I Raised It. So it's on YouTube as well as iTunes and Spotify. And it's like 170 some interviews with founders, just getting into the weeds of like, how did they raise money? So I'd love for you to check that out. And please subscribe to our YouTube. We're trying to get over 1,000. But then also on the blog, we've got some really good articles there. So check that out. And a Facebook group. It's not super active, so I'll downplay that. But here's our YouTube channel. Lots of good stuff on there. My 10-year-old daughter is doing these little thumbnails. I pay her $1 each for those. So if you get funded, we'd love to feature you on the podcast. I love profiling our own customers on this show. And we've had over 100,000 listens. So, could be some free PR for you. So get in touch there. I'll send these slides around. So, some examples of these investor updates. And that, my friends, is that. So I think I'll keep people unmuted because we have a pretty large group on here, but let's get into the Q&A here. Okay, I see some questions in the chat, but I'm going to go to the Q&A first. Aladar, will I send the slides? Yes, I will. Jason Merrick, if you have identified a potential investor and the connector to them is another investor in your LinkedIn network, yeah, that's fine. I didn't cover this. So Jason is asking if their connector is another investor. I used to have this little part in this talk where there's a whole hierarchy of who to ask for that connection. If you have multiple connections to an investor, like in LinkedIn, there's a hierarchy of who to ask. The very best is someone that has made that investor money in the past. A little story I tell is when I was raising money, my son's preschool had a dad's night. I got to know some of the other dads. One of the guys who I'm still friends with had sold his company to Yahoo for $840 million. He made a couple introductions for me, and every single one of those intros responded back in like 10 seconds or less to his intro, right? That's the very most powerful. And of course, I only had one of those, but that's the very most powerful connector, someone who's made investors money in the past. Second is someone who has done deals with that investor in the past. So if an investor has done deals with that investor you're trying to reach, great path for that. Third is someone who's maybe fed them deals, right? Maybe it's an angel investor that feeds deals to a VC. Fourth is, what is my fourth? Fourth is, a portfolio company founder. We've talked about that already. Someone that investors already invested in, super strong signal. Fifth on the list, I would have maybe even put that third or second. Fifth on the list, though, is someone that just, connected on LinkedIn. Maybe they met him at a conference 5 years ago. They don't really know each other, but, they got to connected. So absolutely. Peter, let's keep moving. Peter, seed or Series A, how to determine what round to go to maximize value and traction? We have our MVP, need time to iterate. Well, if you're at MVP stage, I would say you're probably not Series A. You're probably seed. If you're pre-revenue, you're maybe even pre-seed. These labels are fluid, right? I don't want to give you hard answers because these labels are fluid. There are pre-revenue startups that raise Series A. There's exceptions to every rule. But if you're MVP, you're probably seed stage. You have strong validation pull. What does that mean? Is that letters of interest? Is that purchase orders? Like, what is that? If I'd want to poke on what validation pull is, but in this little thing you say right here, I'd probably put you as seed. Yeah. Anonymous, will this be shared? I am recording it, and yes, I'm happy to send this out. Daniel, not a question. Lead Leaper can scrape LinkedIn and pull emails from a LinkedIn search. That's interesting. Now, Daniel, does Lead Leaper pull emails from LinkedIn only on people you're connected to, or maybe you're answering this? Does it pull emails from people that are like second or third degrees away? I'd love to hear on that. Let's keep going. Chad, when you ask an advisor to add context to the column you made for them, are they limited to seeing what column associate with them. Otherwise, there's a way to flag and controlling what they can and can't see. No, Chad, if you're inviting advisors or other members into your Foundersuite account, they can see your entire pipeline. We have not made it so that you can only see their column. It might be something we do. The premise is, if they're an advisor, you trust them, and frankly, it's probably in some ways a good thing for them to see who else you're talking to, who you have in later stages, right? That might get them kind of motivated. And ideally, you also want them to look at your research list. Rosa, I'm not going to show the advisor referral funnel again right now, but I'll send this recording around. Same with David. I know I cover a lot of stuff really fast, so you might want to go into a few of these parts again. Yes, Emo, I will send the deck. Thank you for the YouTube channel. My 10-year-old daughter, who makes those thumbnails, watches our follower count daily and reports every time we get a new person. Yes, Stacia, we'll get the recording. Anonymous, does your platform allow emails to be sent? Yes, on paid plans only, but you can connect your email and you can send out, it's just called send email. You can send out batches of emails, and each one is going to be sent as an individual email. So it's not going to look like you did a big email blast, but it's going to look like even if you're sending 50 emails at once, it's going to look like you sent 50 individual emails, which is really important. Boyd, how important is it for the pitch deck to be pretty? It's a good question. Obviously, if you have other extenuating factors, like your traction is amazing, and I'm an investor, I wouldn't care so much about pretty, but still, we're humans. You're pitching humans. We're reacting to things, partly on the lizard brain, partly on just gut reaction, right? Investors have seen a lot of stuff. So if it looks sloppy, messy, you've got 6 different fonts on a single slide, I might just even subconsciously interpret that maybe you're a messy person and you're going to run a messy business, right? I mean, we kind of make these judgment cues, rightly or wrongly, in first impressions. So I would say it should be pretty. It should look good. It doesn't have to be elaborately designed, but it should look good. It should have a good kind of resonance. Andrea, how to show traction if you're raising seed? Any examples? Well, what to show, what to speak, what are the key messages? Yeah, so traction is this is a good question, hard question to answer. Traction is going to obviously differ depending on every business, right? Every startup is going to have a different level of traction. Obviously, if I almost did a little like hierarchy of traction, revenue's number one, right? What's your actual revenue base? If it's not that, then do you have, daily, monthly active users? Maybe you haven't turned on your business model yet, but you have really strong active users who are coming back, not just one time, but coming back and using it every day, right? If you're maybe enterprise or B2B, do you have a pipeline of qualified prospects that have, started a pilot program? Maybe they're not paying you yet, but they start a pilot program and they're likely prospects, or even letters of intent, right? It kind of depends on your business, but just try and get that sort of hierarchy if you can. Justin, Flo, we have already sent out some cold emails. That's okay. I would not even wait a couple weeks. You should probably be following up within a week or so, but in parallel, do the warm approach, right? Try and get a warm intro. So maybe they looked at your cold email, kind of ignored it, but then a warm intro comes in at the same time. They're like, I better go look at that email again. So kind of do both if you can. Do people resist clicking a link to get the pitch deck? Yeah, that's a good question. I mean, I think there's some of that from time to time. Of course, we could have a long debate about attaching a PDF of your deck versus including a link to the deck. I think investors are pretty well tuned in to clicking a link. DocSend's been around for a long time. Our version's kind of like a DocSend Lite. I think investors are pretty used to clicking a link to see the pitch deck. The advantage of a link is that you can update that pitch deck constantly. So if you send out a PDF, you know, it's automatically like out of date the moment you send it, right? Whereas with the online link, you can always be improving and updating that PowerPoint so it's always the latest, greatest version of your deck. I really don't think, maybe with some individual angel investors, they might be a little concerned, but regular investors, not so much. Rosa, what would be the best way to re-kick off a raise? You did, in fact, take your foot off the gas. Yeah, this is hard. I'll be honest, like when I was raising capital for Foundersuite, I actually tried like twice. I tried, wasn't getting much traction, took a break, came back, I don't know, a couple months later, tried again, kind of wasn't getting much action, took a break. And then the third try was the charm. I came back after another few months. Traction was a little bit better. And I just kind of said, it's make or break it in time. I've got to do it now or we run out of money. So it was really more a driver of like, I've got to raise money. So, you know, in your case, if your traction and revenue is better, just keep focusing on those businesses, give it a little time. If there's something new, a new catalyst, maybe it's a new product, maybe it's a new, you know, market shift or something, you can come back even to the investors that you talked to before and said, hey, I've got a new thing. If there's something new in your story, that's when a good time to re-kick off that raise. So you might have to wait until there's something new. Well, there's a lot of questions. I love this. My company hires an investor relations service provider to help them with messaging. Should I pay them partly with equity? Well, boy, this is a couple parts to this question. If you're hiring an investor relations service provider, I mean, first of all, I'm kind of the mindset that you should be doing this yourself. Like, I get the logic for wanting to hire someone else to help you with this, but investors sometimes don't like when there's a third party or intermediary, you know, acting on behalf of a startup. That happens in later stage rounds when you're hiring an investment banker. If I'm an investor and some other person other than the CEO is reaching out to me, I'm already going to be like, what's this all about? So I might be a little skeptical of that. But if you have an IR service provider to help you and they're really good and you trust them and you've back channeled them and all that good stuff, sure, give them a little equity. Now, I think it's fair to compensate them a little bit of equity, treat them like an advisor. Maybe that's 0.25%, 0.5%. I don't know what it is. However, I made a mistake in the early days of hiring a PR firm, and I paid them a little bit with equity. And it was one of the worst decisions I've made as a founder is to hire this PR firm and pay them partly for equity. They were awful. I won't name the firm. They were awful. They didn't do anything. And ultimately, I had to use our attorneys to get back that equity. So little caution there. Lead Leaper pulls from second and third links and takes a look around the internet. Maybe, okay, I'll have to look at Lead Leaper. I'll definitely check that out. Daniel, if you could, I'd love to have a follow-up conversation about that. I'll try to track you down after this, or if you want to track me down, it's Nathan at Foundersuite. But I'd love to hear, maybe even if you have a minute to do a demo of how you're using it, that'd be really cool. Like I said, I get a lot of new tips from these talks, so this is great. Do you have preferred advisors in your group? No, not really. Our database is mostly investors. We do have like in our startup docs folder, there's like advisors offer letter and stuff. So there's some stuff to help you recruit advisors, but in our database, it's mostly investors. Chad, relating to stages, do you have any thoughts on categorizing a company that is an investment company, makes commercial real estate because it is not a company to make widgets? Sorry, I don't really understand the question, my friend. Okay, you come back to it. Relating to stages, because it's not a company, so it's a little over pre-revenue or prospective buyers. Chad, I'm sorry. We can have a conversation about this later. I don't really understand the question. Shoot me a note. I'm happy to try and parse that a little bit. And then Anonymous, are there templates for monthly investor updates in your solution? Yes, there are templates for monthly investor updates. We've got two templates when you go into the investor updates. There's one for prospective investors and one for existing investors. We didn't talk about that at all, but that's what you send to investors or other stakeholders, advisors, after, they've written a check. It's great to send them. I do an investor update on a quarterly basis to the people that actually wrote me a check. I do an investor update to them every quarter, keeping them in the loop, activating them, asking them for help. And I also talk about like challenges in that one, right? So the one to existing investors is a different format. It includes challenges, more metrics, ask for help, and also a thank you to people who helped me from the distribution list. Donald, let's see. It looks like we had a couple questions in the chat room. I'll just quickly skim these and I'll let you guys off the hook here. Oh, Pierre went to UT Austin. Beautiful. Rosa, Investor Insights. I'd love to hear about that. Okay. I think we're good here. Cordley, you're already off, but yes, I do want you to be on the show after you raise money. All right, guys. I think we're going to pause it here. I'm glad, Adam, your brain is swimming. Thanks, guys, so much. I'll send this recording around, and I appreciate it. Good luck. Good luck to everyone. Thank you for your time. I know this was a very long talk. Have a great rest of your week, and thank you for using Foundersuite. Bye.